Trent Bradshaw, Brandon Rogers, Bradshaw Financial Planning, and Mind Your Money. Thank you for joining us for this market update. Today's January 24th, 2022. Brandon, what we're going to talk about today, we're going to talk about overall market in general and the economy in general and what we see, and then adjustments that we've made inside the portfolio. All right, well, let's jump right in. Let's talk about the overall economy right now. As we saw at the end of the year, inflation had increased, roughly about 7% for the entire year, year over year in 2021, which is the highest level that we've seen inflation since, 1983? It's been roughly, call it 40 years.
Yeah, long time.
40 years. But ultimately, we do see that going down to the 3.5% to maybe 4% range by the end of the year. So we think inflation definitely will ease, and that's a good thing. So hopefully some of those prices stabilize going forward. But the other thing that we're looking at, the Federal Reserve, we've talked about this before, has already started the tightening program by pulling the liquidity out of the system. What the Federal Reserve was doing was printing $120 billion a month, buying mortgage-backed securities, U.S. Treasuries. That program has pretty much ended, or is close to being to the point of ending, and that created a lot of liquidity in the market. Now, it had a lot to do with why the market went up last year. A lot of that money was flowing into the equity markets. Interest rates were low, so there wasn't a lot of opportunity to get any yield anywhere else, so stocks were the place to be. Well, again, that's changed this year. The Fed's tightening, so they're pulling that liquidity out, but then also they're talking about rate increases. If they continue to push for rate increases in a slowing environment growth standpoint, we do think that's going to create challenges. We've already seen it here in the short 3 weeks that we've been in 2022. To give you some numbers, the S&P 500, as of we're filming this, is down roughly about 10.5% year to date. The Nasdaq's down about 15 or 16% year to date. So it's been a brutal start to 2022. But again, we think a large part of that's been driven by the Fed and what they're pounding the table to increase those interest rates, but hopefully to combat inflation. I think inflation will come down itself, so we got to listen to the Fed. Hate that we got to bring policy into our decisions, Brandon, but that's where we're at. What does that mean for our portfolios, and what kind of changes or adjustments have we made to help protect?
So normally, again, we try to make changes just on a quarterly basis, but as things get a little volatile like they are right now, we'll go in and make changes instantly. So, and be quick about it. So we've done about 3 changes so far, I guess, this year. And what we're really trying to do is just kind of pull out some of the higher risk assets or index classes that we have in there. Some sector-related funds that we have there, and just go to more safety, right? Have something there that kind of buffer us from some of this downturn.
Like some dividend stocks or something of that sort?
Yeah, different sectors that we've got in there for dividend players, but then also just kind of lower the risk overall. So we're continually doing that, but like Trent said, there's a lot of different factors that affect this market, right? And the Fed's definitely not helping us out. Hopefully we'll get some type of consideration of that this year, or this week with the Fed meeting, try to give us some guidance there. But we need to really pay attention to that because we're just one headline away from Jerome Powell saying something positive that's turned this market around. So we're doing the best we can right now. It's just trying to kind of shield. And it's working so far. We're not down as near as much as the market is. But we just want to try to focus in on that and try to protect as much as possible.
Yeah, but regardless, the market's been difficult. So and you mentioned this before. If you decide to say, "Hey, I'm getting out of the market," you got to be right in getting back in too, and that's extremely difficult. And that's why we're trying to listen to the policy choices that the Fed is making, because that's definitely driving the market. I mean, this market as a whole, you and I went back and looked at it. If you look at the fourth quarter of 2018, very similar situation. The Fed went through, and we're going to show you this chart, the Fed went through and increased interest rates 3 times. Well, by the time we got to the end of the year, the market had corrected anywhere from 19 to 25%, depending on what index you were looking at. Then the Federal Reserve came out, eased their statement, got a little bit more dovish. market rebounded right back to all-time highs within a 5-month period of time.
And that's a good point that you're talking about, is because you got a lot of intra-quarter or intra-year moves in the market, right?
Correct.
A lot of people look at the market from January to December. Well, I mean, that's a good way to figure out on a calendar basis what's going on. But during those years, I mean, throughout that year, you're going to have a lot of kind of peak to trough, kind of slight, hopefully mini corrections throughout that time frame. So it's very important to kind of look at that and to see what's really moving that. I mean, again, look at 2020 as, for example, right? That COVID downturn doesn't even really show up at all during that year, right? But it definitely, everybody felt it. So, that's what we need to really pay attention to.
So there's some difficult decisions that the Fed's got to make going forward. I think, again, inflation will correct itself going into the end of the year. They're trying to accelerate that, but it could be a major fiscal error. And it could cause volatility, although high now, could go even higher as far as the market's concerned. But if you got any questions, let us know. Again, we've made multiple changes. If we make changes again, we'll be back with updates. But Trent Bradshaw, Brandon Rogers, Bradshaw Financial Planning, Mind Your Money. Join us on social media so you can get the updates, and look forward to speaking with you soon.